What's going on, you guys? Chandler from EzStocks here, coming back at you with another video. Today, we're going over the stock Alibaba. It's basically that huge e-commerce company out there in China and Asia, very similar to Amazon. Recently, though, it's been having a pretty big struggle around in this last little week to month area. So let's go ahead and zoom in here and check it on out. So Alibaba has really been struggling to get over and stay over that 240 range. It's been hovering around it for a long time now, and it recently just peaked up around that $265 mark and had a giant crash down. It dropped all the way down to that $246 mark, and now it's going to be on its way back up. So our idea with this stock is, if it continues to show life and bounce back, we want to set a credit spread on the put side, so that way we just think it's not going to go below that lowest point that it's been, that resistance mark around that $240 mark. So if you go into that trade Alibaba options, what you're going to want to do, or the play that I'm thinking about doing right now, is that sell that put. You want to scroll all the way down to where that resistance line is, so around that 240 mark, just to be safe. It gives you around a 77% chance of profit, but for real, since it's so close to that resistance mark, it's going to be a little better than that, in my opinion. So once you're there, you're going to want to go ahead and select this, and then you're going to want to make sure you buy the one right below it, that $237.50 mark. So now it's going to tell you it's a put credit spread. If it says anything besides this, if it says debit spread or chimichanga or something, you did something wrong. So make sure, again, you're selling the one that's higher and buying the one that's lower. So this is going to give you a total credit of $68 for every $250 you put in as collateral. Now, with that being said, you automatically get $68 for every contract you open up there. So technically, your max loss is only $182 per contract, because you take the difference of the two strike prices, which is $250 minus that $68, and that gives you $182. So that's still rocking a big profit, 27.2%. And it expires on Friday. So in a matter of 4 days, you're going to be making 27% of your money back. And it's a pretty safe play, in my opinion. Definitely check it out. If you got questions, let me know down in the comments below. Hopefully this video was helpful to you. I'll see you guys in the next one. Have a great day. Peace out.